Sponsor the legislation for 5 minutes.
Thank you, Mr. Chairman, and thank you for allowing me to have this bill today. Over the last 10 years, the community financial institution industry has undergone a dramatic transformation. In my district, community banks serve a vital role to consumers, small businesses, and our overall economy. Whether it's a family buying their first home, a young adult purchasing a new car, a small business entrepreneur seeking to get money to start up a business, these consumers rely heavily on our nation's community financial institutions. As a former attorney for a number of community banks, these small banks and also credit unions are the lifeline for millions of consumers nationwide who seek access to capital. However, since 2006, more than 1,500 banks have failed, been acquired, or merged due to economic factors and the overwhelmingly expensive and hurtful regulations brought forth by the passage of the one-size-fits-all Dodd-Frank Act. I have heard from many community banks throughout New York's 22nd District that the cost of compliance has tremendously overburdened these banks. And just to take an example, a couple of the community banks in my community, for one that's worthy of mention is Tioga State Bank. Bob Fisher, who's the CEO and president of the bank, is a regular witness here for us on a number of community bank issues. The Bank of Utica, a small locally owned community bank, which is another bank that would benefit from this. And also Adirondack Bank, which is started as a small community bank and now a regional bank, would benefit greatly from this provision that I'm talking about. These banks not only lend to consumers, they are your neighbors, your next door, your friends, people you go to. I can walk into any of these banks and I know the people that have worked in these banks. They know their community, they give very generously to the community, and they're really important. They're part of the fabric of this community, which is why, but we have burdened them with these compliance costs, and sometimes in many of these banks they've expressed to me that they spend more time dealing with compliance-related tasks and less time giving loans and originating loans for their consumers who desperately need assistance across all sectors. So there's exhaustive proof from my community that these financial institutions need some relief. They need some common sense. They need to properly serve the communities where business startups, consumer credit, auto loans, in a small way, mortgages, short-term notes, all those things that they haven't been able to do because they're burdened with compliance costs. That's why I've introduced H.R. 5076, the Small Bank Exam Cycle Improvement Act. This bill offers real regulatory relief by allowing small banks the chance to have an 18-month on-site exam cycle rather than the traditional 12-month exam cycle. The Federal Deposit Insurance Act requires that only well-capitalized, well-managed banks that have outstanding or good composite ratings are eligible for these extended exam cycles. During the rigorous examination process, federal regulators rate each financial institution on a targeted set of standards and grade accordingly. Under current law, banks with assets less than $1 billion are eligible for on-site examinations once every 18 months. This legislation will move this asset threshold from banks with a $1 billion to $3 billion asset threshold. Congress has recognized the benefits of extending the examination cycle for lower risk community banks, so we suggest also that the National Credit Union Association revisit its rules to change its threshold as well. Federal regulators like the Federal Deposit Insurance Corporation, FDIC, and the National Credit Union Administration, NCUA, have a crucial role ensuring the safety and soundness of community financial institutions to withstand a large range of economic conditions. By extending the examination cycles, it would free up federal financial regulators to spend more time examining those banks who actually need supervision while simultaneously reducing the regulatory burdens on banks who are sound, compliant, and in good standing. This bill is aimed to strengthen our economy, our financial industry, and local communities to make it easier for consumers to access credit and achieve the American dream. I also want to thank the gentleman from Florida, Mr. Christ, for his willingness to work across the aisle on this bipartisan bill. I also ask for unanimous consent to insert letters of the record from the Independent Bankers Association of New York State, the New York Bankers Association, the American Bankers Association. Mr. Chairman.
Without objection.
Thank you, Mr. Chairman. I also want to thank Chairman Hensarling for bringing my bill to the floor today, And I urge all members to support this common sense bill that will certainly help lenders and help our small community banks and credit unions. And I thank you, and I yield back the balance of my time. Thank you.
To the lady.